if you, today we will focus only on IFRS 15. Okay, very, very informative, very, very practical, and very realistic. Very realistic. When I will always give in this session, I will give what we are doing from our individual point of view and what we are doing from the entity point of view. Okay, and it's very informative and very, very effective also. Previously, there was IAS 18 was there. If you remember, people who are involved with this, we call them as IAS 18 revenue. Now, because they are having so many complications, so many additions, so much adjustments, they came up with a standard IFRS 15 revenue from contracts with customers. As a simple concept, if I tell you the one which we are buying in a normal course of action and the person who is selling, I am telling you this in the basic of the basic level. We are buying a water bottle, we are buying a auto or a car, or we are buying any other product. We are buying a house, we are constructing a house, anything where there is a concept of buying and selling is there. Whether it is implied or whether it is applied, whether it is in writing, whether it is in oral, these things will be continued. And it's not one case. We have to be very, 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 very specific about doing the things. They say that when there is a buying and selling, it is nothing but between two parties there is a contract. Is it? There is a contract. When there is a contract, definitely there will be some obligation. There is an obligation that I have to do this. If you understand this first slide, you will understand the entire concept. I am giving a complete overview about this. You will have a contract, you will have an obligation. I have to pay. You are paying money, I have to pay, give you service. You are paying money, I am paying you money, you have to give me product. There is an obligation. Once it is an obligation, and that obligation has to have a performance or for not only performance, we can say it is a performance obligation, and that obligation should also have very clearly a price element. If there is no price element, nothing will happen. Okay, once you have the price element, okay, now sometimes what will happen, you see the thing, this is where we have to understand, is that you have the price element. Maybe in Saudi also it is happening, everywhere it is happening. I will give different examples. Okay, telecom service provider. Here, telecom service provider. Which is the telecom service provider in Saudi? Major one?
STC.
STC.
And mobile.
Yeah, MOBILE?
Yes.
Now, you will come up.
LY.
Huh?
LY. And end with Y.
Okay, yes. You
Yes.
will come across. If I'm wrong, you can make corrections. If you want to add, you can make corrections. Every year, whenever an iPhone is launched, they say that you take the iPhone and you will say that we are going to provide this much GB to you free. They will say that there are various options are there. Okay, I'm telling you the experience of mine. You can add something more, something less. Is that they will say that you buy and you will pay in 12 installments. They will say that every month you will get 1 GB free for next 12 months. In the real world, you know me, I know this, you know this, nothing is free.
Yes. Sorry to just stop you. Just there is a message from Jihad. He is trying to log in, but he is not able to connect.
Same link?
He didn't mention anything about the link, but it's he's saying that you're trying to log in into the call, but no, not connecting.
No, it is there, Now he is there in our group, jihadbadar98gmail.com. Yesterday
No.
he logged in now.
I will message him like log in to the today's link.
Same link. I have not changed anything. I will never change the link. The same link which has been given, the same link you have to log in. Don't ask him to log in into call.
Okay, continue. You can continue, please.
One second. I didn't send the link on your in the group. I didn't send the link.
No, I didn't see the link.
It is there. You got it in the WhatsApp now?
Yeah, he is already on the call now.
No, I send it.
Connected.
I send it on the.
He connected. Jihad connected just now.
Okay. Where he is?
Hello, dear.
How are you, Jihad? Assalamu alaikum.
I'm good, Salam.
Shafin is not there, I think so. Okay. Fine. Now, coming back to this, where I stopped here. Okay. Understand that nothing is there. It's chapter, very practical chapter, very realistic chapter, and you can link to anything. It will same model will work out. They will give 1 GB and they say this 12 months. If that is the case, definitely this is, and they say that you pay if you are buying an iPhone separately, any gadget. I'm not saying that, I'm not in favor of anything, just any gadget. They say that if you are if you are purchasing on a standalone basis, assume that it will be somewhere, I can put it in an Omani Riyals, you can add 10 to that. Okay, I'll put it as it is going to be 300 Omani Riyals. Okay. Now they say that it is G if you are buying alone. But if you say that yes, I am buying with the GB, all those things, they will say that it is also 300. But in this you are having two different performances. You have two different performances. One performance is with the product and the one performance is with the data. You have to, what we have to do, we cannot say that it is the value of the product or it is value of the data. We have to differentiate how much is the value of the product and how much is the value of the data. Okay, this is where we are saying contract, obligation, price, allocation. We have to allocate it under different segments. In some cases, I will give you another as many things as well. Then it is not that only the when the actual transaction will be completed, you feel, you just notice the reality. You are going to buy a simple water bottle. You are swiping your card. Till you swipe your card and it is not successful, the bill will not be generated. This is right. The till will not be opened. Is it right? If you observe that cash till will not be opened. Is it right? The cash till will not be open. Only once it is open, sometimes it will be declined. Understand? It happens with everyone. Sometimes in some situations it will get declined. When it is declined, then you should have an alternative. Is that? Then we should have an alternative. Means you should, in the last stage, it has to be recognized. Any transaction, you take it. Now I gave you a simple concept of a telecom service provider. I will give a concept of a car. In Gulf it is a practice during Ramadan. Okay, during Ramadan, what will happen? They come up with lot of car offers. They say that yes, car is going to be, you can put it as 20,000 means to 20,000 so many real, you can put it, add 10 to that. They said, but what they will say, this is, we are giving free. Nothing is free. They say the free registration. They will say the free insurance, free service. If they say free, they cannot survive. You will calculate. You will also do the same thing in your business. You are also doing the same thing. If you are dealing with your customers, you will say, yes, it is a package. When you are fixing the value of the package, you will fix the value of the package taking into consideration comprehensively all the various elements of the cost. Subsequently, what you have to do, you have to allocate this price. You have to allocate price. How much is the value of the car? How much is for registration? How much is the insurance? You have to pay insurance. Nobody will give free insurance. You are giving insurance. You are also not giving free insurance to your customers. Then how you can expect that you will get free insurance? You have to allocate it. IFRS 15 is having these rules into consideration. We call them as COPAR. Contract, performance obligation, price, allocation, recognition. Whichever contract, I gave you a small example of a water bottle, I gave you the small example of a telecom, I will give the example. In other words, now you see the things. You do this practically 200%. If you are selling computers, is that Every person is there. Maybe you are using the services or you are paying. They say that there is an annual maintenance contract. Is that annual maintenance contract? Annual maintenance contract. Take the annual maintenance contract. Take a small example of 1,200. Is it? This is spread for how many months? This is spread for 12 months. If this is spread for 12 months, recognition, how you have to recognize? You cannot recognize in the month of January. People who are young, people who are new, people who have, I'm talking about you people, who are there in the business, think this. It makes that quite real difference. If you can't say that, we cannot say that in January we will show a revenue of 200, in other months we are going to show there is no revenue. If that is the case, either we will understate the profits or you are overstating the profits. In January we will understate the profits, in February and in other cases we are going to be overstating the profits. Is it right? In other cases we are overstating the profits. What we have to do, we have to make sure that we have to allocate the 100 in each of the months till December. This is the way it happens. Is that in terms of services? Is that in terms of products, in terms of services, in terms of offers, in terms of packages, in terms of installation, everything is perfect. Today you will really know the content, the heart of the IFRS. So when we make the things, previously in the last version of IAS 18, all these things were not there. We will cover each and every case, each and every step with example, with a case study, and we will supplement it with a comprehensive understanding in the end. When we say revenue, is it clear to you?
Yes.
Is it right?
Yes.
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 When we anywhere, any doubt, you want to stop any discussion, just ask. Nothing will happen. Revenue is income. We all know. Okay, revenue is the income in course of a normal trading operating activities. But even if it is there, IFRS making it very clear. IFRS making it very clear. Revenue presented in state should not include proceeds from the sale of non-current assets, even sales tax. We have the sales tax, is it right? We have the sales. We should not include sales tax because this belongs to government. It is the obligation of the entity to pay off. This is not our money. This is we are collecting on behalf of the government, which is going to be paid to the government. If you have a concept of VAT, it applies the same principle. It applies the same, means excluding what? It should not include non-current assets and it should not include VAT. The first point, very, very clearly, it is an indication. We are doing this. I'm not saying that we are not doing this. Most of us doing that. I just have a refresh. Now, what is the step process? 5-step process. The revenue from contract with customers, recognize revenue by applying 5 steps. It says that the first one is contract. Without contract, we cannot. Is it that the moment you are entering a mall, you are entering a retail shop, you are entering a hypermarket, you are entering an outlet, there is a contract that if you buy, you have to pay. Is it right? If you buy, you have to pay. Very, very interesting things will come. Is that you will have a separate performance obligation within the contract. Within the contract means yes. There is a contract between two parties. It should be within two people. Okay, that I am doing this. I will do this. You are giving what will say. See what is the first you will say request for quotation. Is that then you will send invoice. Is that then you will have supply. Then you will maybe you can add some more things in between that if I am missing something. Then you will have the payment. You will recognize that you have received. Then after some time you will have payment. Sometimes you will pay in advance, sometimes you will pay in arrears. Is that? Sometimes you pay in advance, that's a different thing. But more or less you have this process. Means there should be an obligation, and definitely there should be a price. Without price there cannot be anything. Okay, there should be a price. Allocate the transaction price, performance obligation in the contract. Allocate it. If you are having, sometimes what will happen, you will say, keep it in mind. Nowadays it is very much evident, okay, that we are talking about free delivery. There are in some cases there are conditions. If it is more than 1,000 Saudi riyals, we will give you free delivery. Is that there is nothing like free delivery. All is inbuilt. All is inbuilt. Is that you allocate the transaction price to the obligation, and you have in the end we have to recognize when or as a performance obligation is satisfied. Okay, I will send you some case studies, okay, very, very detailed, which has been assessed, is there, in real situations. Tomorrow we will take some more time on this, okay. There is we can understand, we have to complete, but we will, where we can focus, we can focus on this, okay. These are the 5 steps in the IFRS. It has been clearly given in the IFRS 15 that you have 5 steps.
Can I just give a real life example? Just to share.
Tell me, sir.
Well, this is a case because we as an airline, we have, for example, we have purchased a ticket from, let's say, Oman to Jeddah and then Jeddah to Bombay. Okay, so we are allocating the ticket price into subsets. One is from Oman to Jeddah, and the other is from Jeddah to Mumbai. So we have, in this we have 2 separate performance obligations within the same contract. The airline will only recognize the revenue once that part of the performance obligation is met. For example, we have transferred you to Jeddah from Oman. We will only recognize that part. Although you have paid us full, the boarding card has been issued, everything, but until and unless the performance obligation is completed from the entity as an airline, we will not record that part of the revenue during that day. So once both are separately satisfied, only then we'll record the full revenue.
If a person is not traveling from Jeddah to Mumbai,
Sorry?
If a person is not the person is not traveling from Jeddah to Mumbai.
No, if he is not traveling or he missed the flight, then it is as per contract or as per the set of rules which we have given in ticket. But if he is in Jeddah and he is there, his flight is day after tomorrow or maybe after a certain time, only once the obligation is completed, then we'll recognize the revenue. In case he missed the flight, like we were giving we were ready for the performance obligation, but it was his duty to come at the gate or the counter at certain time. If he missed that flight, then we'll record the revenue, which is separate shown as a no-show passenger.
That is the reason in the contract they will say non-refundable.
Yes.
Is it right? That is the case. Now I will tell you this also. Okay, you gave me a good clue. You will get offers. 1 day offer will be there. One you have to travel between these days. You have to travel between 15th November to 1st of February. You will get an offer. Is it right? When you will say
Yes.
they are getting the offer, what will happen? People will buy ticket. Is it? People, but
Yes.
you have to be very confident. Cannot change date. If you are missing, you cannot have any alternative. Is it right?
Yes.
No show, no alternative. Means
Yes.
no show, no alternative. The moment you have the offer, they put conditions very clear. If
Yes.
you are sure that we are going to travel, we have planned our travel, going and coming, then only you have to make commitment. Once
Yes.
sale is a sale. Is it right? In this case, once
Yes.
sale is a sale. That's all. It is nothing is there. Now, are you clear about this?
Yes.
Now, I will tell you this. Whenever you are buying a product, they will say goods sold will not be, will be exchanged, but no cash refund, something like that, within 7 days. On the invoice, on the bill, it will be clearly given. Goods once sold will be you can exchange goods similar value within 7 days. Beyond 7 days, you cannot do it.
Yes, you're right.
Conditions are there. Okay, I will give more important, but this is a good discussion. Everyone will enjoy this. Okay, now this is also what, once it is sold, cash will not be refunded. Once it is sold, it is a sale. Okay, once, and within 70 days, 7 days, it is a sale. Now, I will tell you this, nowadays, lot of people are doing all these business tricks, okay? The moment, I think it is there in your place also, very funny things. People will not realize it. They say that when you are going, you take membership for us. You take membership for some card they will give, and they say that you are getting some loyalty points. Okay, these royalty points, you can redeem it. Is it? These royalty points, you can redeem it. What we think, yes, it is everyone. It's not you, it's everyone. We say that, okay, we will take membership, we'll get loyalty points, we will go. Is it? We will get loyalty points, we can redeem it. But this is only the front end. We will discuss this, what will happen in the back end. What will happen? This is, see, they have to realign, readjust the price. Okay, they have to realign, they have to readjust the price. As simple as that. These all issues we will cover here. Is that, as you said, the air ticket, as I said, within 7 days. Another example, as I said, that there is a redeemable royalty points. All are directly related to sale and all is going to contribute to the revenue. Is it clear to you?
Yes.
Okay. Now you see the things. Just read this one. I already explained. Just you have to explain me. You all should get involved and how we have to recognize the revenue. Dates are very important. I'm just putting it in another way. This is the reporting date.
In my opinion, the company would record or recognize the revenue 300 plus 12.
300 plus
Plus 12.
check 300 plus 12. Check again.
I think it's 300 plus 10, no? Because 12 months.
Yeah, sorry, 10.
10.
Is it clear to you? Yes, Sanjay sir.
Sir, the statement says how much revenue where should recognize in the year ended 31st December. So if we are talking about completion of 12 months, then initially he will record the sale of 310 in the Jan, and then subsequent month he will record $10 every month. So at the end it will be 420 together.
My understanding says 300 plus 10 in December, and then January onwards for 11 month, 10 should be recorded as a revenue. Every month 10 means 11 months.
On
So
first December.
31st December, the first selling price of 300 plus 10 should be recognized. From Jan onward, it's 11 month, every month, $10 to be recognized.
Yeah, yeah, this is correct. This is correct. What this now says.
I told, and it is very much important that for us, reporting date is 31st December 2001. They have entered the contract on 1st December 2001. Okay? They have entered the contract for how many months? For 1 year. Means it will be effective till 30th of November 2002. They are asking us to know what is the value. There are two components are there, 420. One component what you said is, just I am giving an explanation, that's all. 300 related to the
Unit.
120 related to the service, and this service has been paid, this amount has been paid upfront. If you are selling it, is it right? If you are selling it, how much is there? We have to make sure that how much is for the unit and how much is for the service. Service will be divided under 12 months. Okay, how much you have to recognize? You have to recognize, that is the same. There is a contract is there. Is it right? There is a contract is there. There is a obligation is there that you are providing. There is a price element is there. We are allocating between two different stages, and how much is there? We are going to recognize it. How much we are going to recognize it? That is what said. They are what is the 5 stages of revenue recognition. Recognizing how much? 300 plus 10. Is it clear to you?
Yes.
One hypothetical question. If the title is transferred at the end of contract, it says the transfer its legal title immediately on the same day. Hypothetical question: if the title is transferred after or end of the contract, then the recognition would be a little different.
When you are paying 300, why he will transfer at the end of the contract?
That's what I said. It's a hypothetical question.
Okay. I will get back to you also, the same thing. If you remember,
Okay.
we have covered something called as substance over form. We have covered something in substance over form.
Yes, kind of.
What we have covered there, take an example. Is that it is similar, okay? Similar. Is that you are possessing what is physically you are possessing the good products. Physically, it is a substance.
Yes.
Is that form? You are paying or you are not paying. Okay? Form in terms, you don't have a legal title. You don't have a legal title. Legal title will be transferred at the end of the period, as you said. Is that legal title will be transferred at the end of the period? Fine, that's okay. Why we are bothered about that? We are not. In that case, what will come into picture? It comes into picture what is the substance over form. Always the substance will take priority over the form.
Okay.
Okay? Substance will take priority over the form. Are you clear about this?
Okay. Yes. Please continue. Thank you.
Yeah. Next. See the things. Some more detail. What they are saying, they are giving you the explanation further. Very basics, very effective. There should be an agreement. There is an agreement between Wade and customers. Provision of goods and services. There is a performance obligation, promises within the contract. There are two promises are there: to supply the customer computer and to supply the support. We are having the price. Everything is clear. You have devised, you people have devised so many contracts. Now every year, every day, just think over it. The first invoice what you have issued or what you have signed, and the today or the recent invoice what you have signed. There are so many changes you have incorporated, so many clauses. so many clauses. The moment you get something hit, you will become more alert, more active. Transaction price. Standalone, you have to make standalone price is 300 and 120 they mentioned. 120 is for the support. Then you have to say that control over computer has been passed, so full revenue should be recognized. Is that? Revenue should be recognized. We have not given the service. We have given the service only for 1 month. We have to take service cost for 1 month only. Are you clear about this? Next. See the thing. Now, when you do these things, next, it will really know how, because why it is the first one, everyone is involved in this process. IFRS says that a contract is an agreement between two parties, rights and obligation. It does not need to be returned. That is the reason I say that we are purchasing a water bottle. We are purchasing so many things. Is it right? We are purchasing online. Is that when we are purchasing online, terms and conditions will be there. If you see the things at the end of the online purchase, you have to tick one box, I agree, terms and conditions. I agree, terms and conditions. Hardly anybody will read that. But we are in such a hurry that we will put one tick mark there so that we can submit. Till you don't put a tick mark, it will not be submit. Is that? I will give you the things. Is that very basic? You are talking in terms of taking a loan from the bank. Okay? See the thing. You see the behavior of the people, and it is a fact. Is that? You will see what will happen. In the bank, the loan application will be so many pages. Every page, there are some banks will say that on every page you have to sign. On every page you have to sign. Okay, we do no one except some. I'm not talking about companies. Companies, people will read each and every clause. Each and every clause. Somewhere they will argue. If they are not reading, they know, but they will read. Any clause is there. But as an individual, will not read. We'll just click here, we will submit it, and we'll go there. But at the time of repayment, all these problems will start. The banker will say, go and read this clause 13.4. You see what you are doing and what you have signed. When you have agreed it, you have to pay it. These things will come. It should not, everything should not be written. Just now I told you, the moment we are entering a commercial place, we are in a contract that if we purchase, we will pay. It is implied within the terms and conditions. Entity can only account for revenue from the contract if it meets following criteria. Very simple. See, this is where, that is the reason somebody said that we are in the receivables. Is that if receivables are increasing, people are very much concerned. If there is no recovery, there is very much concern. Is it right? Now, the parties have approved the contract, and each party writes what is the right of the buyer and what is the right of the seller. A legal, see, this is very legally, as a matter of fact, it is have a legal complications. So many companies they will file legal cases against other people. A parties approved, each party rights have been identified. Giving a check is a contract that we will pay by time, that's all. We are going to pay by time. If we are not paying a fine, the legal case it will is a financial crime. If check is bounced 3 times, bank will not issue the checkbook. The payment terms has to be identified. How much is down payment? Is it? How much is the down payment? How much are the installments? Is it right? And how much is the final settlement? It happens. Construction of houses, same thing will happen. Is that construction of houses? You are buying any asset for your business purpose also. Any asset, there will be a very clear terms, payment conditions. 10%, 20%, at supply this much, installation this much, final approval once it is satisfied, you have to do this much. Terms and conditions are very identified. The contract have a commercial substance. Transfer, is it right? There should be a commercial. I am paying, you are giving. That's what it says. There should be substance, means there should be some physical form that happens. That is the reason intangible assets have some terms and conditions. We will cover intangible assets when we are doing this. It is probable that the entity will be paid. When it is a probable, we are going to say that most likely we will get. There is no probability, contract will not, the things will not work. If I am selling the product and there is no probability, that is the reason IFRS is very conscious about this word. If you have the opportunity, is it right, to know the conceptual framework, the version 2018, the updated version. In this updated version, the only point of discussion that has been mentioned is probable. People criticize this a lot. First, this is where, see, if there are no terms and conditions, see, I will say this, and I will tell you this from religious point of view also, from the commercial point of view also. When there is a transactions, it has to be very, very written clearly. You should not change the terms and conditions once you have entered the contract. Another party should also not do. This is the identification of contract. Now, you see the thing. Read this one. What it says? Tell me. It is there. Aluna has a year ended 31st December. 30th September. The dates are very important. Always I will put timeline here. 31st December 2001. Okay. When it has been happened on 30th September. Is it on 30th September? On 30th September. Okay, 30th September 2001. They have signed the contract. Okay, they have signed the contract to provide them with an asset on 31st December. Control over the asset passed to the customer on 31st when it has been paid. When on 31st December, the customer will pay. He will pay. He will pay on 30th June. He will pay on 30th June 2002. Yeah, he pay on 30th June 2002. Everything is fine. On 31st December, as a result of changes in economic climate, is it right? Is it? Aluna did not. This is in reference to what? This is with reference to COVID-19, what happened. Okay, this is with reference to COVID-19, what happened. On 31st December, as a result of changes in climate, Aluna did not believe it probably that it would collect the consideration that is entitled to. On 31st, they say that yes, the probable is less because of economic conditions. Is it? And they say that there is going to be no revenue to be recognized. As simple as that. Is it right? We are selling the product, we sell the product with expectations. Is it right? There is no, you cannot say that you cannot say that I am going to purchase a product with 0% down payment. Okay? Nothing will happen. The moment there is no revenue element, there is no price element, and the probability also is remote.
Less.
The probability is also remote. They did not believe it was probable that it will collect the consideration. Therefore, the contract cannot be accounted and no revenue should be recognized. Simple concept. Okay, I will give a simple concept. You will have a revenue. You will have a revenue. You will have it will be converted to what? As a credit. Okay, credit sales. Take the credit sales. You will have the receivables. You will have the cash. Very sensitive. Is that terms and conditions are very clear. Is that terms and conditions are very clear. That how much you have to pay when you are going to pay at the beginning of the contract. Nobody will say that we'll start the contract without any payments. Is it right? Nobody says that there should be an element of payment has to be there. People say 10%. In some cases, if you are buying on online, is that you are buying on online? Okay. When you buy on an online, what will happen? What will happen? You have to pay 100%. Is that you have to pay in advance, and then only they will accept the order. The moment you are paying 100%, what will happen? There will be a binding agreement. Is that binding unwritten agreement between two parties? That is the reason people are very clear. Is that when you order it, pay first. Otherwise, we cannot proceed. In some cases, I will give you example. It's a practical. Most of the time, we will not accept debit cards. We will accept only credit cards. Now, people are saying debit cards also, but immediately remittance will be there. Initially, Initially people you say that only credit cards are there. In nowadays also in some cases you will say that they will accept only credit cards. These things will be taken into consideration because when you are using the credit card, the other party is going to have the assurance that they will recover the amount. If you are not paying, bank you can recover through the bank. And if you are using the credit card by default, if we are alive, Alhamdulillah, then we are supposed to pay our credit card payments. Fine. This is the example with respect to what identify the contract. First you should identify that things are working, will work, or things will not work. If you have a doubt, you will not enter a contract as such. Are you clear about this?
Yes.
Next. Read, say the things. Obligation. I'm dividing each step. Is that I am dividing in step. You relate to you. Just visualize. Keep it in mind. Just visualize what you are doing individually and what you are doing at your workplace. That's very important. Unless until you don't visualize, you will not have a clear understanding. Obligation or promises to transfer distinct specific goods, services to the customer. You order on Amazon. Is that you order on Amazon any product? I'm talking about any. They will give you a picture first. Is that they will give you a picture of that product and they will say what is the price. Is that when it is going to be delivered, the same product will be delivered. Is that is a distinct. That when we say there is what distinct means, what you are saying, what you will get. It's very simple. It's very simple, and you visualize it. It is really a good way of understanding. Some contracts contains more than one performance obligation. Is that some performance will have more than one performance obligation. I told you, you are buying a car. Is that they're not only giving you a car, but also they will give some more benefit. They are talking about some insurance will be there, registration will be there, service will be there. They will say now, they will say that yes, a gift will be there, a raffle draw will be there. Is it right? A grand raffle draw. Every day they will draw. At the end of the session, there will be a draw. Can you imagine how much they are generating revenue and how much they are gaining? Nowadays, there is nothing like that. Those were the golden days when we used to have this. Is it? Yes, Imran sir? Is it right or not? Once upon a time, okay? Once upon a time we have this. These things are there. Now it is not that much visible. Is it right? So, when we are doing the things, there is a more than one performance obligation. Entity may enter into a contract with the customer to sell a car. Includes free servicing, maintenance. But there is a maintenance cost. There are different examples. Entity might enter into a contract with the customer to provide 5 lectures. They will say that yes, study material is free. But on the first day of the course, is it? First day of the course, prices will be less. You say that, is it right? You have something, they say now, they will say something is there now, if early bird offers, is it right? If you registered within this time, they will get some, they will get discounted prices, something like that will be there. Okay, I don't know I am using the correct thing or not. Early bird offers, a technical word which has been attached. Okay, if there is anything is there, I will add to that. What it says means when we are attaching a performance obligation, another performance obligation to the contract, then you have to be very specific. Distinct performance obligation within the contract must be identified. A promise of goods is distinct if the customer will get the benefit of the goods and service on its own by using resources that are readily available. Means you are offering the product, but the customer will get those benefits on its own. Means he can get benefits separately also. Customer will see the benefits if he is getting on the other side of the coin and the benefits we are getting with the product. They will make a comparison. The rule says that the promise to provide goods and service is separately identifiable from other contractual promises. What the promise to provide goods is separately identified. You have to make very distinct. That is the reason they say it has to be very, very distinct. It has to be separately identifiable. If you are taking a product, is right? If you are taking a product, if you don't take the product, what will happen? How much is the difference? How much you have to allocate and how much you have to recognize it. That is the reason we have to identify the obligations separately within the contract. You cannot mix it. Okay, you cannot mix it. You cannot combine it. Is it? They gave a small example. Read this one. On 1st December 1/12/2001, they say that they are going to provide for the next 12 months. The consideration is how much? The consideration is 12 million. They are entitled to an extra 3 million after 12 months. If you say after 12 months, 30/11/2002. Condition is there, is that condition is there that the number of mistakes made for, there is a condition that you are doing less mistakes, less errors. How much you will get? Then you are going to give how much? 3 million. First tell me what we have to do.
First, we'll record the 1 million in December. the last part that says Listo has no experience of providing the service and is unsure if the number of mistakes made will fall below the threshold. So if at this point they are unsure about the entitlement of extra 3 million based on the mistakes, so I think they will not record the 3 million part or any part of it in December.
They'll still
Yes, correct. Yeah, correct. Because extra 3 million will only come at the end of the contract. They will calculate the mistake and everything.
after 12
So
months.
yeah, after 12 months. So that point will not come as said by Mansur. So right now the revenue recognition is only for 1 million for this particular month.
This is how much is that fixed element. This is fixed consideration. This is a variable consideration.
Yes.
Is it? This is the fixed consideration, this is the variable. First you have to identify, is it right? Fixed consideration and variable consideration. There are only two results are there. See the thing, there is a two results are there. Either it will be successful, probable, either it will be successful or it will be unsuccessful. Is it right? It will be successful or it will be unsuccessful. Now we have to know if it is successful, how much you will get. If it is not successful, how much you will get. Is it? Discuss the accounting treatment is, you have said for the statements is 31st December. If they are highly probable that the number of mistakes will fall below the expected threshold, can you tell me what is the value? What is the revenue?
Sir, can you repeat please?
See, they say that very clearly. There are two things are there: successful and unsuccessful. Is it? And we have to mention that what will be the revenue on? What will be the revenue on 31st to December? It's very much clear that the revenue is only for 1 month. The revenue is only for 1 month. And they say that in one, if you are successful, point number A. If it is unsuccessful, point number B.
But to check whether we are successful or not, it has to be at the end of the term or end of the contract.
Probable is there. Probable, highly probable. Highly probable.
Oh, but it also says the identical service, not the same service.
Which one?
It says Bristow has experience of providing the identical
Okay,
service.
fine, no problem. Identical services in the past. We cannot provide the same service for every customer. Every customer specifications will be different, but identical services. Identical services.
Well, for the part B, of course, it will be at the end because they are unsure about it.
Again, please.
I'm saying for part B, where they say they don't have experience of providing the service, so better not to recognize any variable consideration during this period.
I agree.
It has to be at the
I agree with this. Then what will be the value? What
Value will be 1 million only.
value will be how much? 1 million only.
1 million.
I agree with this. Everybody agreed with this?
yes.
Yes.
Next. What is point number A?
Well, what we have discussed, I think this 3 million apportionate for the 1 month would be recorded based on the discussion that it is highly probable.
Give a big appreciation to Mr. Mansoor sir. Is it not exceptional thinking? We have to think like this. I really appreciate. Everybody should come with this. Is it right? Whoever
Thank you.
is associated with him is a big asset. His logical thinking. Everyone has to do that. They say that highly probable. When they say highly probable, 12 million divided by 12 months. Time, okay, 12 plus, okay, 12 plus. Highly probable, 3 million divided by 12 months. Or 15 million divided by 12 months. It comes to 1.25 million.
Yes.
Is it right? Now, are you clear about everyone? Is it okay?
Yes, sir.
Okay? Think. See, this is where, see, now, this is the mistakes most of the people will do. Most of the people. I am not saying this. Is it? Now, why it is there? Whenever we are talking in terms of sales, is it? Whenever. What happens? They say that it is based on the performance. Okay? Based on the performance. Number of mistakes. We'll take positively. Is it? When said, you are talking about sales. The performance will not happen in 1 month, okay? Either in any case, positive or negative. If there is anything, it will accumulate over a period of time. Why I'm saying why we have to take 3 million divided by 12 months? That is more important. Any positive or negative, it will not happen instantly in 1 month. It will happen over a period of, if you are doing good performance also, consistently you have to perform well. Consistently you have to perform well. Then only you are reaching the threshold. Okay, sometime plus or minus, that's a different case. We are not bothered about that. Now what will happen if you are consistently every month you have to allocate 0.25 million. Is it? 0.25 million. I will give this example. Is that? I will give this example with respect to what? I will give this example with respect to a team sales, individual sales. Is that? Individual sales. Okay. Take that example. Okay. Ramadan is the best way of understanding the sales concept. Okay. Anything is that why I am saying is it is very much visible. They say that 1 month, one month sales target achieved. Is that 1 month sales target achieved? You will get this much bonus. If you are saying is that 12 months sales target achieved, you will get this much bonus. They are not only focusing on 1 month, they are also focusing on 12 months. Definitely, if 1 month they say it is going to be, they are very talented people, okay? Sorry to say, but if I don't tell, you will not understand. Very talented people. Management is very talented, okay? Very sharp. Of course, we are also talented, but I'm telling you, okay? Where they say that monthly target is 1000 units. In the end, they say that if you are having 12 months, they say that 12 months target is 15,000 units. Automatically, you have to work for 1 month. Automatically, you have to work for 15 months. Means you should not only reach monthly target, but also you reach yearly target.
One example, I'm sorry to just interrupt. One example is the number of policies that the insurance people sell. So, if it's a yearly target, what they saw that the yearly target was achieved in, for example, let's say 3 4 months, and then they saw that the people or the sales team, when they achieved the yearly target in before the year end or before the 12 months, they used to sit idle that okay, we have done our part. So what management did in one of the previous companies that I have heard, that they, the same thing that you said, they said there are two targets. One is the monthly target, and the other one is the annual target. So that kept on a challenge for the team to sell more policies. And what happened in the end, that they surpassed their monthly targets as well as their annual targets.
That is the reason I'm saying now. I see. I visualize that. I think how, what are the things that will fit, so that otherwise I will tell that. I will tell you, one of my close friends, he's very aggressive seller, very aggressive seller. What he used to do, as you said, he used to meet the targets in the first 5 days of the month. He's working in Jeddah. Can you imagine? He's working in Jeddah. He's working in Samsung. Once upon a time, he used to reach the target within 5 days. And other days he will just relax.
Yes, exactly.
He will just relax. Is it right? He said that I reach monthly target, then I have recovered my amount. I will be very quiet. That has changed the concept of IFRS. In IAS 19, 18, it was there. In IFRS 15, it has been changed. Okay? So, when you are doing that is the reason. There is a fixed consideration, there is a variable consideration. Fixed consideration is the salary. Variable consideration is the commission, benefits.
Exactly.
Is that? Now the companies will also see. Otherwise, what will happen if you do like that? You will have a lot of inventory mismanagement will be there. If you talk about the insurance policies also, just imagine you have first 1 month, 2 months, 3 months, you will have full. You are reaching the target, and next 8, 9 months just keeping at it. Fine, but unfortunately there are claims. What will happen? There will be a burden on the companies.
Yes, yeah, you're right.
There are so many things that crop up. Is it? There are so many things that will crop up. Are you clear about this?
Yes.
Next. Can we stop for a while?
Yes, let's have a break.
Okay.